What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on Meta platforms. And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then we'll continue with the fundamental news and I will show you exactly why we had this massive sell-off and how we can handle it. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you the exact roadmap of the potential price action. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here, at this very point, when we hit the 0.236 Fibonacci retracement level at the price point of $323.43. And on my previous video, I've told you that we finished, let me switch to daily time frame. We finished all 5 waves structure, and in this case we have to pull the Fibonacci retracement tool from the bottom of the first wave to the top of the 5th wave, because the 5 waves on a smaller scale, it is 1 wave on a greater scale. And I've told you that most likely we will hit deeper levels, and it will be 0.382 at the price point of $285.3 and 0.5 $254.49. Definitely the golden pocket was also in my mind, but at that moment I didn't expect that we might go so deep, and it happens. And let me show you on the 4 hours time frame. This massive candle, as you can see, broke all the levels that I marked in my previous video, and technically for those of you who already done your own due diligence and who wanted to enter your position as an investor in this company, these levels were very good levels to accumulate the position. But all in all, for now, we have not more than 9% to the golden pocket pattern, and I will show you what should we do next in order to catch at least a bounce for this massive sell-off. But for now, let me show you some fundamental news and let me disclose what was the reason of this sell-off and how we can handle it. So on February the 3rd, we have this article and it says Meta/Facebook faceplant set to wipe out most equity value ever. And let me quote you this. Facebook parent Meta Platforms is down 25% of Wednesday's disappointing earnings report, erasing more than $220 billion in market value, the biggest single-day equity wipeout ever. The worst equity tumble ever wouldn't be the first major drop for Meta, which slid 19% in July 2018. That $120 billion market cap drop was a record at that time. And let me show you this drop if we switch to weekly time frame. Right here from this top, it has this massive movement to the downside. In total, it was more than 44%, but the first candle hit around 20% price point. And for now, from the very top to our current range, we already have the decrease in price for more than 38%. Massive movement to the downside, one of the biggest movements overall from its previous all-time high. And let's continue with this news. Let me give you a sneak peek on the numbers themselves. And let me quote you this. After US stock markets closed Wednesday, Meta said it earned $3.67 a share on $33.67 billion in the fourth quarter of 2021, while Wall Street analysts had forecast the company to earn $3.83 per share on $33.44 billion in revenue. So they beat on revenue, but they missed on earnings per share. And key user figures also fell short, as daily active users came in at 1.93 billion, up 5% from a year ago, but below estimates of 1.95 billion such users during the quarter. Daily active users also fell from the third quarter, the first such decline on record. Monthly active users of 2.91 billion, which rose 4%, also came in short of expectations for 2.95 billion. And definitely these expectations were extremely meaningful for the analysts and for investors, and when company missed these expectations, definitely it has a huge sell-off. Despite of decent fundamental position of the company, on one day it lost more than 26%, almost 27% of its value. And definitely it is a huge movement to the downside, but it is a huge opportunity. And let me show you in general that we have 37 ratings according to TipRanks, and 29 of them suggest to buy, 8 suggest to hold, and 0 to sell. And the lowest price target is $230, average price target is $333.31, and the highest price target is $425. And to the average price, this asset has an upside potential of more than 40%. And I think we can benefit from this forecast, especially with this harsh sell-off. But let me show you one negative sign that might be a long-term negative catalyst for the company and potential first red flag that you might consider as the major red flag for putting this asset into your retirement portfolio. And let me show you this. On January 11th, on CNBC.com, we have this article that is titled "Facebook drops 36 spots on Glassdoor's annual best places to work list after a year of PR crisis." And key points are: Facebook parent Meta Platforms dropped 36 spots on Glassdoor's annual ranking of the best places to work in a year marked by major public relations crisis. A trove of internal documents released by a former employee sparked a series of hearings and public outrage against the company. This means if people don't want to work on Facebook, and it is an internal problem that might lead to much higher problem that will affect all the shareholders, this means, in my opinion, in the long-term perspective, unless we won't see the increase in this rating, this asset is not the best asset for your retirement portfolio, and keep this in mind, please. So let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let's switch again to daily time frame or even to 4 hours time frame, and let me show you that we have a massive sell-off, as I already mentioned, and we broke all the levels that I marked in my previous video. But we didn't hit exactly the golden pocket, statistically the most probable range of trend reversal. And this movement shows us the huge opportunity to catch a bounce. And let me show you what should you do. If you want to catch the bounce, just accumulate your position all the way down to the $215 price point. And right here, if you zoom out a little bit, we have very good confluence with the top of our first wave, and it also might be a good support/resistance at the price point of $223. Then golden pocket itself, and the lower range that we might hit is about $207, and this means all this range of from $223 to $207 might be your accumulation points. But for now, we have extremely oversold indicators. On 4 hours time frame, we hit the range that was a support for very long period of time. And if we switch to daily time frame, as you can see right here, RSI is on 24.76 range. And as you can see, previous touch of this range by RSI was at the 10th of March 2020. And it was the local dip related to the pandemic hit. Next one was right here at the end of March 2018. And it doesn't mean that we cannot go lower from this point in general, but we should have at least a bounce. And this bounce, let me show you some price targets. If I pull the Fibonacci retracement tool from the very top of the fifth wave to the very bottom, this bounce might be at least to $271.61, or most likely it might hit roughly $294.02, roughly $300 price point, and this will give you an upside potential of about 15% to the first target and about 25% to the second target. And I have to say that the downside potential is extremely low, not more than 10%, and this leads to very juicy potential risk to reward ratio. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!